Hi viewers, here a new video how mortgages work. Individuals and business use mortgages to buy real estate without paying the entire purchase price upfront. The borrower repays the loan plus interest over a specified numbers of years until they own the property free and clear. Most traditional mortgages are fully amortizing. This means that the regular payment amount will stay the same, but different proportions of principal versus interest will be paid over the life of the loan with each payment. Typical mortgage terms are for 30 to 15 years or 15 years. Mortgages are also known as liens against property or claims on property. If the borrower stops paying the mortgage, the lender can foreclose on the property. For example, a residential home buyer pledges their house to their lender, which then has a claim on the property. This ensures the lender's interest in the property should the buyer default on their financial obligation. In the case of a foreclosure, the lender may evict the residents, sell the property, and use the money from the sale to pay off the mortgage debt. The mortgage process would be borrowers begin the process by applying to one or more mortgage lenders. The lender will ask for evidence that the borrower is capable of repaying the loan. This may include bank and investment statements, recent tax returns, and proof of current employment. The lender will generally run a credit check as well. If the application is approved, the lender will offer the borrower a loan of up to a certain amount and at a particular interest rate. Home buyers can apply for a mortgage after they have chosen a property to buy or while they are still shopping for one, a process known as pre-approval. Being pre-approved for a mortgage can give buyers an edge in a tight housing market because sellers will know that they have the money to back up their offer. Once a buyer and seller agree on the terms of their deal, they or their representatives will meet at what's called a closing. This is when the borrower makes their down payment to the lender. The seller will transfer ownership of the property to the buyer and receive the agreed upon sum of money, and the buyer will sign any remaining mortgage documents. The lender may charge fees for originating the loan, sometimes in the form of points at the closing. Options. There are hundreds of options on where you can get a mortgage. You can get a mortgage through a credit union, bank, mortgage specific lender, online only lender, or mortgage broker. No matter which option you choose, compare rates across types to make sure that you are getting the best deal.